Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have David Drapkin, Director of Product Strategy at Boardroom Alpha, which provides ESG data and analytics for corporates. Today, David joins me to discuss the SPAC environment and if we are at peak deal. David, it's great to have you with us. Welcome to Trade Talks.
Great. Thanks so much for having me. Excited to be here and talk about SPACs.
You got it. And let's review what you observed in 2021. Why did we see an overwhelming amount of companies going public via a SPAC versus the traditional IPO route?
Yeah, it's a great question. So 2021 was really a watershed year for the SPAC product. Record issuance and hype surrounding the product that nothing like we had seen in the SPAC market in all previous years combined. We like to refer to 2021 as peak SPAC, if you will. In Q1 of 2021, we saw over 300 companies go public. And I think that the SPAC product has a couple advantages for companies going public versus a traditional IPO. The one is the traditional IPO process tends to be a bit cumbersome, time consuming. And so if a company is looking to go a bit quicker, the SPAC product is a nice avenue there. And I think two more things are important. The one is the SPAC sponsor. If you find a quality SPAC sponsor, that maybe has capital markets experience, investment banking experience, or private equity experience, to really advise a younger company towards the public markets and really be a shepherd and alignment with them going forward. That's an advantage to some of these earlier stage companies. And the third is the ability for that company to tell their story. In the traditional IPO, a company has to rely on historical financials. And as we saw during the peak SPAC, a lot of companies that went public via SPAC are either pre-revenue or earlier stage. And the SPAC allows them to market their deal on projections and tell their story of future growth versus just what they've done in the past.
So David, do you expect to see the same level of activity as we go through 2022?
Right. So SPACs are here to stay, first of all. So we definitely expect to still see SPAC activity here in 2022. I think it's going to look a little bit different. I think the issuance boom of 21 is over, so that'll be a little bit less going forward this year. But what we're going to see this year is a ton of SPAC deals and potentially even some SPAC liquidations.
Are there too many SPACs at the moment?
Yeah, popular question. We certainly think that the market got a bit overheated, especially with a lot of what we like to call one and done sponsors, jumping into the market when money was very easy. So to look at it today, there's over 580 SPACs out there looking for deals, another 115 that have announced deals and have yet to close. And so, we certainly think that, that number should go down a bit. And, if you recall, the typical SPAC has 18 to 24 months only to find a deal, complete a business combination, or liquidate. So as these SPACs begin to age, we estimate in Q4 alone, there's going to be over 300 SPACs that are over a year old. As these SPACs begin to age, they're either going to have to announce a deal, but as they're coming up to that finish line, unfortunately, you might see sponsors stretch to get a deal over the finish line because to them, something is better than nothing, which unfortunately might lead to some poorer SPAC deals being announced this year, and also definitely an uptick in SPAC liquidations.
So, David, my next question to you is how influential are the sponsors?
Right.
You know what I mean? It seems as if the sponsors have as much leverage as the fundamentals do. So while we saw a record number of SPACs, we also saw a lot of companies come public that either were unprofitable, perhaps it was a time for them to come public. It seems as if the sponsors have as much street cred, if you will, than the fundamentals itself.
Yeah, exactly. I'm happy you brought that up because, us here at Boardroom Alpha are super focused on the sponsors. And what we think is going to be the surviving aspect of the SPAC market is true quality sponsors that have track records of bringing quality companies to the public market via SPAC are the ones that are really going to survive this. And so the one and done sponsors, the ones who are in for a quick buck, quick transaction, didn't join the board, sold their shares very easily, we think those will go away. And the really important ones, the ones with serial track records, we think of Gores, M. Klein, DMY, Truins of the world that have done this multiple times, are really acting as advisors and long-term aligned shareholders with the companies that they're taking public, are going to be the ones to survive rather.
Yeah, that's encouraging to hear because it doesn't seem fair to the companies themselves, for these advisors just to leave as soon as they go public, which leads into my next question. What are the biggest issues that post-deal companies are facing? Why have they performed poorly?
Right. Yeah. And it's a really interesting question. I'm happy you asked it. So de-SPACs today are certainly in a rut. I think there's a variety of factors contributing there. I think one, at least currently, is the elevated level of redemptions that we're seeing in SPAC transactions. approaching the end of last year, we were at like 60% of SPACs redemptions. So far in 2022, we're up to almost 90%. And so what that does is that signals less shareholder support to the general market and might beat down on performance a little bit. And then the other two things I think you hit on a little earlier are, keep in mind, a lot of these companies that have gone public via SPAC are more earlier stage VC-like type investments that are unprofitable, maybe don't have any revenue, and are very new to the public market. So I think as these companies begin to grow, maybe become more seasoned on the investor relations side, and communicating their stories to shareholders, that might, in and of itself, help to, return to performance. And the third thing, I think today there's such a negative sentiment around some of the SPAC product that, any company, no matter if you're, a pre-revenue flying taxi company or an established industrial company, for the most part, if you're tied to a de-SPAC today, your performance is likely going lower. And so I think that's a circular product of just being a de-SPAC today. Whereas I think as these companies grow, they spend more time in the public markets, they tell their story to shareholders, hopefully in the future that can reverse rather, and you could see some more, positive performance based on the actual performance of the company versus, just being called a de-SPAC.
Right. And David, to wrap up here, what are the 3 key takeaways for the audience?
Right. So number one, SPACs are here to stay. They can still be very profitable, depending on, where you trade. So whether that's for yield or, a lot of SPACs still present a very attractive, risk reward opportunity for investors. And number two, we spoke about this a bunch, but, really look out and pay attention to those strong sponsors, the ones that have SPAC franchises and track records of bringing real quality companies to the market. And the third thing is, and we've seen this in 2020 and 2021, is the SPAC market is fickle. It changes very fast, very quickly. So I would expect to be on your toes for 2022, expect big changes, keep your nose in the data, follow the market, so you can be positioned to take advantages of both those risks and opportunities later this year.
All right, David, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Great, thanks for having me.